In October of this year, Crowe Horwath was fortunate to team up with Bank Director to conduct a nationwide survey of how directors and CEOs felt about the bank M&A market. So let me share a few of the thoughts that we've determined so far. Let me first start off by talking about the state of the M&A market today. Now, if we look at 2011, it is below 2010 levels and well below pre-crisis levels as well. And if we look at each of the quarters in 2011, they will finish below their corresponding 2010 level as well. Additionally, if we look at the fourth quarter of this year, unless there is a significant uptick in the number of announced deals in the remaining 3 weeks in December, we will also see the fourth quarter of 2011 be the lowest quarter in the last 2 years. Additionally, there have been 90 FDIC-assisted transactions, now well below the 2010 levels, but still a significant number of opportunities for buyers to be able to expand into new markets. As we look at the number of troubled banks on the FDIC's troubled bank list, there's more than 800, so we should anticipate seeing additional deals in 2012. Now, 40% of the respondents said they did not anticipate that their institutions would buy anything in the following 12 months. This actually did not surprise me. If we look historically at the level of uncertainty that is existing right now compared to prior years, it is significantly high for the buyers, and they're experiencing issues that they're having a difficult time being able to reconcile. The first would be credit quality. Historically, there is a high correlation between the level of credit quality and the level of deal volume. If we look all the way back to the early 90s as a part of the Resolution Trust Corp, we had significantly high levels of non-performing loans and, not surprisingly, low levels of deal volume. We're seeing that in the current crisis as well, and so until there's some credit resolution in terms of improvements in the levels of credit quality, I don't believe we're going to see deal volume increase. Not surprisingly, if we look at the survey, 66% of the respondents said this was a major impediment for them to be able to do a deal in the next 12 months. Additionally, we have uncertainty in the economics. We still are seeing some difficulty in being able to string together several months of improving economic factors. And until we see the economy improve, I don't believe we're going to see buyers' expectations improve as well. It just becomes too difficult to forecast post-deal earnings for them. We also have stock market uncertainty. We had a nice run up in the beginning of 2011, but then we had that major fall off in the end of the summer, and we're also seeing major highs and lows throughout the remainder of 2011. If an acquirer wants to use their stock as a part of the transaction, it becomes difficult to be able to price that, not knowing from week to week where that price might be. Lastly, we have significant regulatory uncertainty. Now, Dodd-Frank has been out for a while now, but the implementation guidance is still yet to be determined. And so the ultimate cost and difficulty in being able to apply for this and being able to use it within the bank is becoming difficult to understand. And so until we see uncertainty be resolved, I don't think that we're going to see buyers or sellers really thinking about transactions until they have a little bit better understanding of what will happen post-deal. Now, nearly 57% of the respondents said one of the top barriers to doing an acquisition was the unrealistically high pricing expectations of potential targets. Not surprising on the seller side, a number of sellers also recognize that they're in a fairly low pricing environment. This creates a mismatch. Do we really have buyers who think the sellers are unrealistically high, or do the sellers understand that the pricing market is just too low for them? I think what it really boils down to is understanding where that credit quality is, because I think that's where the pricing gap truly exists. Now, buyers typically are skeptical when they come into an institution because they don't know the loans as well. There's always belief that the sellers have some bias. And even with due diligence, they may be able to close some of that pricing gap, but you usually don't have as much time as you'd like to be able to get through the entire portfolio. And so until we can recognize and close this gap of pricing expectation with regards to the credit quality issues, I think we're going to see this gap in terms of pricing between the price the bank might be able to achieve for the seller and the price that the buyer is willing to pay for the institution as well. Now finally, let me share some thoughts about 2012 in terms of what the M&A market might be like there. Until credit quality improves, and we have seen it improving over the first 3 quarters of 2011, but is still so significantly higher than pre-crisis levels that I don't think it's going to improve deal volume. We will see, though, I think, additional capital opportunities for some of the buyers. There seems to be more interest from a number of investors in providing capital for platforms to be able to go out and do acquisitions. So we may actually see an increase in the number of buyers. We will also see, as I mentioned earlier, some transactions with the FDIC, as there's over 800 institutions on the FDIC's problem bank list. We'll also see actually some additional branching opportunities through branch acquisitions. We've seen some acquisitions announced more recently, and that certainly will be an opportunity for a number of smaller institutions to be able to do an acquisition and to be able to supplement their existing franchise platform. I think we'll also see a number of sellers maybe getting pressure from the implementation of Dodd-Frank, as well as the Treasury nudging existing TARP holders to pay off their TARP in a more reasonable time frame. And so for a number of them, they may not have opportunities to raise capital to be able to pay off the TARP, and so an acquisition may be their only opportunity. Certainly time will tell, and we'll see what happens through the remainder of 2012. And we look forward to the next opportunity to share with you our thoughts through a survey that we hope to do again next fall.